What's up, fellas, and welcome to another Blockchain Future. The last few days, there's been a lot in the news about decentralized finance, specifically centralized and decentralized lending. This is a new area, obviously. Nobody thinks about getting interest or earning interest on their crypto assets. But there's been quite a bit of news. Mainly, there's been an announcement by BlockFi about a pretty good interest rate that you can get on Bitcoin and Ethereum. And then Dharma, which I will go over in a second, has been talking about how they now support DAI, the decentralized stablecoin, which I have referenced in other videos. They basically have gone over that they now support it and that you can lend and borrow it and earn interest that way. I kind of wanted to go over Dharma specifically because it is a very interesting protocol. But first, let me address crypto asset lending in general, because it is a new area and it is the future of decentralized finance. So, crypto asset lending, securities lending is a vital component of global finance, enabling borrowers and lenders to move assets to their most productive use. Borrowers are able to take on leverage, hedge risks, and access working capital without selling their existing assets. On the other side, lenders are able to earn interest on their long-term investments. In sum, the entire securities lending market totals 2 trillion US dollars in value globally. Generally speaking, crypto asset lending can be broken up into two core buckets: custodial and non-custodial. Custodial lending involves borrowing and lending from a trusted third party, while non-custodial lending refers to borrowing and lending through smart contracts. And this is also, you can think of this as custodial being centralized and non-custodial being decentralized. The largest custodial lending avenue is Genesis Capital Trading, a subsidiary of Digital Currency Group that originated over 550 million US dollars in loans over the course of 6 months in 2018. Crypto asset holders can also borrow and lend from centralized exchanges like Bitfinex and BitMEX, but recent insights into their practices have caused users to grow weary of the associated risks. Given how few platforms offer high-volume lending, borrowers and lenders are taking on interest rates in the high teens to access this margin. Non-custodial avenues are emerging to serve the increasing demand for user-controlled lending. We recently announced Dharma Lever, a service that allows crypto asset holders to trustlessly access margin in high volume from anywhere in the world instantly and affordably. Users of any kind, be they institutions or large crypto asset holders, will be able to use Lever to access the Dharma credit market, a global pool of borrowers and lenders, creating a more globally accessible credit market that makes it easier for borrowers and lenders to find each other, should lead to a better price discovery and more competitive interest rates. Non-custodial lending that leverages smart contracts also stands to benefit from three primary efficiency gains. First, by creating an open market of borrowers and lenders, interest rates on Dharma Lever will be competitive and transparently determined. Second, loan agreements are settled instantly rather than the usual hour-long or sometimes even day-long over-the-counter settlement times. And finally, users never give up custody of their funds, protecting users from hack and theft. And that last piece is pretty big because we're dealing with smart contracts and we're dealing with blockchains. The user really isn't, it's locking the funds into a contract, and they really never lose access to them. So somebody can't just steal your money, if you're loaning it out for a certain interest rate. And depending on how it's programmed, depending on how the smart contract is coded, it can be released instantly when you want it, or it can be locked in for a certain period of time. Obviously, the interest rate will depend on what kind of settings are set for the loan. This also gets into like money markets and proof of stake bond. It goes deep into this future of decentralized finance. I just wanted to kind of go over this part of it because I wanted to get into the Dharma protocol in general. That did go over a bit of it in that article, but Dharma, an open protocol for generic tokenized debt agreements. In 2011, Marc Andreessen famously wrote that software is eating the world. In 2017, we proposed an addendum. Blockchains are eating the financial system. One after another, the asset classes that store the financial system's value are being subsumed, swallowed, or augmented by tokenized analogs. And that statement is really, really good. I mean, it really sums up what is happening, and people can't see it, um, and what's going to happen at a faster pace in the future, um, especially regarding decentralized finance. I mean, it's kind of a no-brainer when you think about what blockchain is. It's not a person that has greed programmed into them. Um, I mean, you can take the most moral person and money will change them. I mean, the way that a decentralized system like blockchain is set up, it's a no-brainer to want to put your money into that and to pool everybody's money into something that can't be cheated, that can't be, that can't be swindled, or like what happened with the financial crisis in 2007 and 8, where loans were given out to people when they knew that they couldn't afford them. Stuff like that can't happen when you're dealing with smart contracts that are looking at the risk, that are looking at all these different factors. And a lot of the blockchain stuff is not really fractional reserve lending like we have with our current system. But I digress. So this goes a little bit further. Equity markets provide the most lucid example of this phenomenon. Token sales have created an attractive, egalitarian alternative to the time-intensive process of raising capital in an equity fundraise, and we've barely begun to scratch the surface. Kind of goes into it here. Goes into this part actually is pretty good. Kind of gives you an idea of the size, money-wise. In the legacy financial system, equity is a much smaller asset class than debt. The total value of global equity hovers around 73 trillion, a relatively modest sum in comparison to the 213 trillion in global debt assets. The mania around token sales has demonstrated that tokens are useful for representing assets with both utility value and equity-like properties. The natural next step is to port the world's loans, bonds, and debt instruments into openly tradable permissionless tokens. So let's take a second to digest what was just said here. So obviously there's a lot of debt out there in fiat that isn't going anywhere. It is out there, it is sitting there, and it's not being used. What they're saying here is that we can actually take that debt and tokenize it. And by tokenizing the debt, it is actually making the debt liquid, because then you could actually use that debt and move it around like money. So by tokenizing the debt, you're actually making it useful. And that's something that hasn't been done before. I think I mentioned this in a video a few videos back about, actually, I believe it was the STO video I just did yesterday, about how tokenizing real estate, stocks, bonds, by doing that, it makes them more liquid, and that you can actually use it as a form of money, so to speak. Obviously, there's going to be restrictions on what you can do, but the same goes for debt. So by tokenizing debt, it really opens things up for what can be done with it. It's kind of a little bit out there when you think about it. This graphic kind of gives you an idea of the total crypto market cap, which is this tiny little dot, the total equity market cap, which is 71 trillion, and then the total, the big one here is the global debt market cap. So and actually this is from a little bit ago. So I believe that the market cap for crypto is a little bit smaller than this right now. I would have to check. So Dharma is a protocol that is looking to create decentralized, tokenized debt agreements. It's very interesting. It's one of the cooler things I think that's happening on Ethereum. Um, Obviously, with smart contracts, a lot can be done. Now, one thing that they announced today was that they are allowing DAI to be used with their protocol, and they have a nice little interface here that I wanted to show you guys. So you can see here they've created a nice UI for borrowing. You can see DAI is entered, ETH is given back, all done through a smart contract. Very easy to do. And then this is actually what it looks like. Oops. Borrowing, dashboard. Where's lending? There's lending. Well, here's the dashboard for managing the loan. Very nice. It's very maker-like. It's very clean. This is lending. This is being tested right now. I think you have to request to try and be a part of it. But mark my words, this is the future of finance, and it's best that you start learning about this stuff now, because people are going to be screaming to learn about this stuff 10 years from now, 5 years from now. These guys are on the forefront of the financial world of the future. So you can see that they have a really good interface that they're building out for their protocol that is shaping up to be something, to be a big part of decentralized finance. Now, I wanted to pivot into this announcement by BlockFi, which is a little bit different because we're actually dealing with centralized systems. Let me start here. So it says BlockFi to offer 6.2% APR on Bitcoin and Ethereum deposits. Forbes reports that BlockFi, a company that raised $52.5 million from investors like Novogratz's Galaxy Digital last July, has launched a potential game-changing product. BlockFi has reportedly given clients across the globe the ability to make up 6.2% annual interest on Bitcoin and Ethereum deposits. This quote, interest account, end quote, offering will go alongside BlockFi's loan offering, which allows users to borrow more than $2,000 at 4.5% interest rate if they deposit collateral denominating in 3 leading cryptocurrencies. In an announcement, Zach Prince of BlockFi explained, BlockFi is the first crypto challenger bank. Bitcoin and crypto lending, especially to retail investors, is a nascent market. It has though been pushed on by institutional interest over the last year or so. The Winklevoss twins, Gemini Trust, will be backing the novel offering through custody, which has full insurance coverage. It's always nice when that word insurance is added into this stuff. I mean, and this is one of the things they have to deal with centralized systems, insurance, things like, when it comes to the decentralized systems, because of their nature, you don't need to worry about insurance for the most part. I mean, we really don't know until we get there and there's a lot of volume going through it, but you're basically trusting custody to somebody else and you're not holding custody yourself. So you can see here that they graphed it out a bit. Bitcoin diehard Anthony Pompliano, who has invested in BlockFi through his venture fund at Morgan Creek Digital, broke down the offering in depth in a post on Off the Chain. In Tuesday's edition of the publication, which Pomp heads, it was explained that the interest accounts could be the highest yielding deposit vehicle in finance. That's a big statement. Better yet, it provides compound interest, security, fund safety through Gemini, and a crypto payout system that may be appealing for fervent investors in the space. To many, a 6.2% interest rate on their investment could be tantalizing. Per Ryan Todd, a research analyst at The Block, a soft launch of the finance offering in Japan saw big success, with the BlockFi team stating that their trial run in the Asian nation was very strong. You can see the tweet here. They go on to say here that it's maybe not cracked up to what everybody's saying here. One of the reasons that Dharma is using DAI specifically is it's a stable coin. So by pegging it to the dollar, people don't have to do this math in their head about, oh, how much interest am I getting? And then, if I'm getting this interest on Bitcoin, what is it worth in dollars? And then what is the percentage of, they have to do, it's just too much, especially when you're trying to attract people into the space. So I think that the Dharma is really smart for doing it with something like DAI, which is, $1 pegged, which is a good thing. What they're saying here is that because BlockFi is using, the interest rate is basically on the crypto itself, and for people in the crypto space, they may know what that means and they may be okay with it. But for people that like dealing with dollars at the moment, that it just won't be. This paragraph says it best. 6.2% may seem great and all, but everything is paid in cryptocurrency, meaning that the fiat value of BlockFi accounts could fall, and even worse, by more than the interest rate they receive. This could single-handedly deter mom-and-pop investors from allocating their capital to Bitcoin and Ethereum for a deposit on the blockchain-enabled lending platform. Moreover, it can be argued that there are similar or even better returns in more established investments, especially in traditional equity markets. And I agree with that. But at the same time, I do appreciate them creating this and trying to move people into the space. Now, I really don't consider this decentralized finance because it's really just a custodial, centralized institution that's then giving an interest rate on. So it's like a bank that's giving you interest on your crypto. But what Dharma's doing with this, and another one was Compound, what they're doing is actually giving you interest that's decentralized and has an underlying asset supporting it, which is Ethereum. So I'm really interested in this stuff, as you guys can probably tell, and I will be getting more into decentralized finance in the future, in future videos. But I thought that this was pretty good, a pretty good article going over what Dharma's doing with DAI and the Dharma protocol itself, and kind of what's going on with the crypto debt market and how, it's pretty crazy where this stuff is going. I'll have all the links to these in the description if you guys want to check them out. But yeah, I think that anybody in this space should be looking into all of these different tools that are being built, because they really are the future of finance. So appreciate it. Have a good one.